Sort of watching to see what happens around here.
Yes.
Okay. Well, why don't we talk about SJREI for a few minutes? How and why did you start SJREI?
Well, as I mentioned, the San Jose Real Estate Investors Association, the genesis for that was the fact that we became landlords, and we didn't really even know that you could hire property managers. That's how green we were.
Okay.
And so we just decided to try and get some investors together who could chat about real estate, and we ended up having a few people in our home, and it grew and evolved. And as you know now, we have 3 chapters spanning the Bay Area, East Bay, South Bay, and Mid-Peninsula. And we still collaborate and network around real estate, and we host guest speakers that will keep us cutting edge and aware of what's going on in the real estate different real estate markets and the opportunities that are available to people.
So part of what's going on with SJREI is that you get also the providers of the various services for these people.
That's right.
And getting together with the people that are interested in maybe getting involved. And most of the people, an awful lot of them that are there, they're really just sort of getting information before they decide to stick their big toe into the water.
I know.
Yeah.
And there are a lot of people who actually, you know, have been with us for several years. And they divested of properties at the right time. And so we have a loyal following. And we have a lot of people who come hear about us. We have a SJREI journal that people can learn about real estate too. It's lots of informative articles. You're featured this edition in it. But talking about tax issues, legal issues around real estate, markets that may be an opportunity for investors, and even California now, there's just a lot of opportunities here for people who have money. I think the issue right now is financing for investors.
Financing is a big deal.
Yes.
Well, what are some things that happened based on what you learned with SJREI?
Well, we took our eye off the ball in the sense that we stopped investing. We got 2 properties, and then we began to build the SJREI, and that was time consuming.
Yeah.
And it took a lot of energy to do that, and so we stopped really investing. We just managed those, and we kept managing this new business. But what I learned was that having a network of people who were experienced and who could share with you how they dealt with certain situations regarding real estate. You know, if you had a tenant that was a problem, how do you do an eviction, or who do you call, and how much should it cost, and what's the process? And there's a lot of great information available through contacts, and we have an affiliate program that has a lot of great professionals that are available, and these professionals come to all the meetings, and they're available to chat and talk to people and assist them with the issues that can arise.
Okay. So tell me about some of the things that you've done more recently, like in the last year or so.
Okay, so we had exchanged into Dallas-Fort Worth area, as I mentioned.
Yes.
And then we had made some money on when we sold our primary residence. And we purchased 3 houses in the East Bay over in Antioch area. And we did that because they cash flowed, they make sense. The replacement value was a lot more than we paid for them. So we paid in the $140,000 range, and they rent out for $1,500, $1,600. And so because we had too many loans from our other properties, we ended up paying cash for those.
Wow.
But in an economy that is very up and down, it's nice to have that security. And so eventually we'll take the money out of those again and move forward. So we bought 3 of those houses, and in addition to that, we bought a small bulk package, REO package.
Okay, now what's an REO?
Our real estate owned by banks.
Okay, so basically they're foreclosures.
Yes.
Yeah.
Properties that the banks have taken back, they've completely gone through the foreclosure process.
Right.
And so we bought a package of approximately 10 houses that were located throughout the U.S. and we have a system in place for helping people to get into those, and we owner finance them.
Okay.
For people who couldn't maybe qualify.
Okay.
Yeah.
We did another interview with Lori Graymont.
That's right.
So
yes.
She talked a little bit about that. So folks, again, in our past episodes at financialinsiderweekly.com. But again, talking about your own experiences, because now you, like I said, you've actually gotten involved in doing this yourself to some degree.
Yes.
Sort of giving it a try after
yes.
you learn about these
yes.
things. Now, did you buy these all personally, or did you use any retirement accounts or anything?
Actually, we bought this in a retirement account, and one of the houses that we bought in the East Bay, we bought with an IRA, and we have the check writing capability on ours, which is not suitable for everybody. If you're very detail oriented, it's a good tool to have, but you can access your IRA funds to buy real estate. And so essentially we bought a house for $70,000 and we put about 18 into it, and that house generates about $1,200 cash a month. And so it's very nice because essentially the stock market is up and down and pretty unpredictable, but if you have a little house that's in a neighborhood that's at least good, solid, working middle class, you'll always be able to find a tenant. And if you pay cash for it, if for some reason rents decline, you're not as concerned because you're not making a payment every month on it.
Yeah, as long as you've got enough that you can pay the property taxes and...
Yeah, you have to have money. This is, you have to have money in your account, to take care of a roof or if something happens. But you need that for any real estate investment that you buy. You need to have reserves. And I think the other thing that I would say is not to over leverage. We always put 25% down on all of the other properties that we bought of our own money. And then, it gives you room if something happens with the market, and it gives you time to recover. You're not, if you put no money down and you get in trouble, it's just a situation that is rife for disaster, and you don't want to lose a property or two or three because, you wanted to amass this big portfolio of real estate, but you really hadn't thought of the consequences and the numbers involved and the monies that's required to facilitate your business, because it is a business.
Yeah. So you mentioned to me about when you were buying some of these properties.
Yes.
Especially, I think the ones more in Antioch area.
Yes.
That not so long ago they were selling it significantly more than you ended up paying for them. Isn't that right?
Yes, actually, we bought that one that was $70,000 was a little older house, and we bought that actually online. It doesn't mean that we didn't look at it. It was an online auction, and it was just at a time when nobody seemed to want that. It needed work, and we were willing to do it. But the other two houses were newer, single-family homes, and people paid in the 400 range for those, and we're in them, like ready to go, ready to rent at about 140. So I don't think...
That gives you a little more, you feel like you got a little jiggling room there.
Yes, and we're not banking on appreciation. If you get the cash flow, you're not banking on appreciation. But appreciation will happen long term, but it's not something that we go in looking for now. And frankly, we were kind of lucky in Stockton that it occurred and we had the right information to get out on time.
Yeah, you were lucky there.
Yes.
And